Now, common points I'll be asking you, you must be able to reply. And different points I'll be explaining you, so be attended. Did you all take it out? Page 45, question number 7. Look at it. From the following balance sheet of A Limited, you are required to prepare a statement of changes in working capital and fund flow statement. So, equity and liability side. Okay, balance sheet we always see afterwards. First we see the additional information. Look at additional information. A piece of machinery costing rupees 50,000 was sold for 30,000. Accumulated depreciation thereon being rupees 10,000. Now understand this. In the last question, which working of fixed asset did we prepare? On the basis of WDV or cost minus depreciation? WDV, because if you see, we had solved question number 4. In the balance sheet asset side, directly fixed asset was given, means it's WDV. But now if you see question number 7, asset side, how are fixed assets given to you? Fixed assets minus accumulated depreciation. So here we have to prepare the workings by the second alternative. Second alternative means where fixed asset is to be prepared at cost. Now, a piece of machinery costing 50,000 was sold for 30,000. Accumulated depreciation thereon being 10,000. First of all, what is the profit or loss on sale of machine or fixed asset? Understand that. Cost of machine sold is 50,000 minus accumulated depreciation on machine sold is 10,000. So what would be the book value or WDV of the machine sold? 40,000. Now it is sold for 30,000. Means is it a profit or a loss? Loss of 10,000. Did everyone understand this? Now what will be the effect of the loss in fund flow statement? Loss on sale of machine. Where do we show it in fund flow statement? Yes. In the fund flow statement, I'm not asking you the working. Yes. Uses of fund now. Where do we show loss on sale of fund from operations, non-cash and non-operating expenses? What will be the effect of this loss on sale of asset in fund from operations? We will add it as non-cash and non-operating expenses. Show this workings. Did you understand this now? Should we make fixed assets working or fixed assets and depreciation two workings? Yes, the relative I was asking. Should we only fixed asset account or fixed asset account and accumulated depreciation account? Fixed asset and accumulated depreciation both. Now look in balance sheet. What is fixed assets opening balance? 4 lakhs. Closing means definitely purchases there. And to find the purchases we will make fixed assets account. So market as ledger account over there. And see accumulated depreciation. Why do we make accumulated depreciation account there? To get current year's depreciation. And you can see in the question current year's depreciation is not given. Okay, that itself I told you the workings. Generally fixed assets account will be made to find purchase of assets, and generally accumulated depreciation account will be made to find current year's depreciation. So first we'll make fixed assets account. What are the results? This one? Mid-term results. I'll inquire amounts. Yes, be ready. Fixed assets account. What is the opening balance? 4 lakhs and closing balance? 5,50,000. So opening balance will write on debit side 2 balance, brought down 4 lakhs. Closing balance we will write on credit side by balance, carried down 5,50,000. Now if you remember I told you that if we make fixed assets account at WDV, then which depreciation comes on credit side? If we make it WDV, current year's depreciation come on credit side. Now here we are making it at cost. So at cost, which depreciation comes on the credit side? Accumulated depreciation of the asset which is sold. In adjustment, what is the accumulated depreciation of the asset which is sold? 10,000. That depreciation will come on credit side by accumulated depreciation account. I repeat it once again. What is the basic difference in two accounts? In fixed assets at WDV account, which depreciation comes on the credit side? Current year's depreciation. And in fixed asset at cost account, which depreciation comes on the credit side? Accumulated depreciation of the asset which is sold. Is everyone clear with this? What else will be recorded in fixed asset account? Selling price. The fixed asset is sold for 30,000. So credit side by bank account 30,000. What else will come in fixed asset account? Profit and loss, here loss. Profit will come on debit side, loss will come on credit side. So by profit and loss account, in bracket loss, 10,000. And then whatever remains is the purchase of asset. So credit side 550, 60, 96 lakhs minus 4 lakhs, 2 lakhs to bank account in bracket balancing figure. Now what will be the effect of purchase of fixed asset of 2 lakhs in one close state? Uses of funds. Okay, purchase of fixed asset of 2 lakhs, we will show it in uses of funds. Is everyone clear with this? With pencil, mark it as uses of funds. So, any confusions with that? Now, same way we are make which one more account? Accumulated depreciation account to find current year's depreciation. Now, accumulated depreciation, how to make it, understand it? Did you all make a format? What is the opening balance of accumulated depreciation? It's 80,000. Where will that come? In accumulated depreciation, opening balance, can you see 80,000? It will come on credit side. Buy balance brought down 80,000. And then closing balance of 1,35,000 will come on debit side. What else come on debit side? Yes, accumulated depreciation of this asset sold, which in fixed assets you have written by accumulated depreciation 10,000. In accumulated depreciation you will write on debit side to fixed assets account 10,000. And then whatever balance remains is current year's depreciation. So 1,45,000 minus 80,000, 65,000 by profit and loss account, or by depreciation account rather, in bracket balancing figure. This is current year's depreciation. So what will be its effect in fund flow statement? Add in fund from operations, O plus. Okay, effect of the 65,000 will be add in fund from operations, O plus. So all of you are clear with the difference in question 3 and question 7. Sorry, question 4 and 7. In 4 we had made only fixed assets account, that too at WDV. Because in balance sheet only fixed asset was given. And in 7th question we have made fixed assets account at cost, as well as we have made accumulated depreciation. Okay. Look at second adjustment. During the year dividend paid was rupees 50,000. Dipesh, what will be the effect of dividend paid in fund flow statement? When I ask you, then only you should reply. Uses of funds, all of the market as you. Now see in balance sheet. See in balance sheet, do you find proposed dividend? What is the amount? No, there is a correction. Make a line from general reserve to 85,000. Make a line from bank loan to 1 lakh. Trade payables to 3,10,000. Bank overdraft to nil. Proposed dividend to 45,000. And provision for tax to 50,000. Now, what is proposed dividend? 45,000 and 60,000. Now, what is paid 50,000? Is it same as opening balance 45,000?
No.
So, we'll have to make proposed dividends ledger account to find current year's provision for tax. Do the marking in proposed dividend as ledger account. So, fourth workings will be proposed dividend account. Now, proposed dividend account, Samarth, how to make it? Credit side dividend paid of 50,000. What will debit side? Dividend paid of 50,000 will come on debit side to bank account 50,000. What else? Where will that go? Opening balance of 45,000 will come on credit side. Buy balance brought down 45,000. Closing balance of 60,000 will come on debit side. To balance carried down 60,000. Now debit side total 1,10,000 minus 45, so 65,000. What will be that? By profit and loss account in bracket balancing figure. Now this is current year's proposed dividend. What will be the effect of current year's proposed dividend of 65,000 in fund flow statement? Uses. Not uses is dividend paid. We already marked 50,000 as uses of fund. O plus, it will be taken as non-cash expense. Proposed dividend means amount is only kept aside but not paid to anyone. So it is a non-cash expense O plus. And in second adjustment, dividend paid we have already marked as uses of fund. Do you understand this? Everyone, workings are very important in this chapter. Third, during the year tax paid was 65,000. Netra, effect of tax paid 65,000 in fund flow statement. Uses of funds, market as U. In balance sheet, do you find provision for tax? What is the opening balance? 50,000. Is 50,000 is what is the tax paid? No, what is paid is 65,000. So again, we will have to make provision for tax. Ledger account to find current year's provision for tax. In balance sheet, provision for tax also marked as ledger account. So now we'll make fifth working of provision for tax account. Namrata, how will we make it? Opening balance 50,000 will come on credit side, buy balance brought down. Closing balance of 1 lakh will come on debit side, to balance carried down 1 lakh. Yes, tax paid, what amount? 65,000 of tax paid will come on debit side, to bank account 65,000. Now debit side 1 lakh 65,000 minus 50,000, so 1 lakh 15,000. What will we write by? Profit and loss account in bracket balancing figure. And what will be its effect in fund flow statement? O plus, it's a non-cash expense, will again add it in fund from operations. Okay, in fund from operations as a non-cash expense, it's only provision made current year's taxes always paid in the next year. So we'll add it in fund from operations. Is everyone clear with this working also? Any doubt in this? Then fourth adjustment. Has everyone done up till here? Bank loan was repaid on 1/4/50. Now here I'll give you a shortcut also, but understand the logic first. In balance sheet, what is the opening balance of bank loan? 7% bank loan. 1 lakh. Closing balance? 25,000. Means we have repaid bank loan of 25,000. Okay. That repayment of bank loan 25,000 will come where in front of statement? Uses of funds. Mark it as U. Now what is the relevance of repaying on 1/4/15? Understand it. 25,000 you repaid in the beginning of the year itself. 1/4/50. Would you pay interest on 1 lakh or on 75,000 during the year? 75,000 because loan is repaid in the beginning itself. So during the whole year the loan pending with the company is only 75,000. So interest will be calculated on 75,000. Can you see 7% bank loan? Yes. So in the balance sheet on the left side or right side around interest on 75,000. Why on 75,000? Because 25,000 is repaid in the starting of the year itself. So interest will be calculated on 75,000. 75,000 7%, 5250. Two effects will come. What will you do with interest on bank loans? Two effects. One effect O plus, it's a non-operating expense, it's a financing expense. So mark it as O plus, and uses of one, mark it as U. Okay, interest on loan will have two effects, O plus as well as uses of funds. Now remember one shortcut, listen carefully. Whether the bank loan is repaid or it is borrowed, whether the bank loan is repaid or it is borrowed. If the date is given 1/4/15, then count interest on 31/3/16, closing balance. If the date is given 31/3/16, then count interest on 1/4/15, opening balance. Opposite. If opening date the loan is borrowed or repaid, count the interest on closing balance. If closing date the loan is borrowed or repaid, count interest on opening balance. Suppose it was given that it is repaid on 31/3/16. Then you count on 1 lakh. Then 25,000 you are repaying at the end of the year. So whole year you are using 1 lakh rupees. So you remember this shortcut. That if opening date is given, then count interest on closing date. If closing date is given, then count interest on opening date. Did everyone of you understand this? Any doubts for that? Now look at the remaining things in balance sheet. Equity share capital. Opening is 3 lakhs. Closing is 4 lakhs. Snail. What will we get from that? Yes, mark it as S. Issue of shares is done on 1 lakh. Opening is 3 lakhs, closing is 4 lakhs, means we have issued equity shares of 1 lakh, that will come in sources of funds. Is everyone able to understand this? Then general reserve, MN. Opening is 85, closing is 1 lakh 10,000. What will be the effect of that? Yes, mark it as O plus. Opening is 85, closing is 110, means we have transferred to general reserve amount of 25,000 in the current year. Transfer to general reserve is an appropriation. So that will also get added in fund from operations. I told you 3 things get added in. Items debited but not resulting in outflow of fund, non-cash expense, non-operating expense, and appropriations. Okay, there's an appropriation. Mark it as O plus. Bank loan we already discussed. Repayment of 25,000 will take in uses of fund, and interest will have two effects, O plus as well as uses of fund. Then trade payable. No. Payable. Yes, simply mark it as CL, current liability. It will come in step 1. Schedule of changes in working capital. Then Raj, bank overdraft. No. Bank overdraft in current liabilities, I told you we don't take it in current liabilities, we take it in sources or uses of fund. Because money is borrowed or repaid. What is opening balance of bank overdraft? nil, and closing means we have borrowed bank overdraft of 5,000, so that will come in sources of fund. In current liabilities, bank overdraft, proposed dividend, and provision for tax. Three things don't come in step one. Okay, so bank overdraft will come in borrowing of bank overdraft, sources of funds. Proposed dividend we already discussed, and provision for tax we already discussed. Fixed assets discussed, accumulated depreciation discussed. Now investments, opening balance 80,000, closing balance 1,10,000. Nisha, uses of fund, we have purchased investments of 30,000. Opening is 80, closing is 110, means we have purchased investments of 30,000, that will come in uses of funds. Mark it as U. Any confusions in this? Then inventories, Shah, current assets, mark it as CA. Surita, trade receivables, current assets CA, and Agam, cash, current assets C. All these three will come in step one, schedule of changes in working capital. Any confusions with any of the things? So now we'll make step one, schedule of changes in working capital. A limited, schedule of changes in working capital. What are the columns? Particulars, 31.3, 15, 31.3, 16. Changes in working capital. In that two sub-columns, increase and decrease. Make the columns everyone. Make the columns everyone. Now, Prarthna, first we start with current assets. Invest. Very first inventories is 2 lakhs and 2,25,000. Yes, current assets have direct relation with working capital. So if current asset is increasing by 25,000, working capital will also increase by 25,000. Did everyone understand this? Any doubts on it? Then Abhishek, yes, further in current assets we will take trade receivables, no amount of trade receivables, 2,10,000, 1,80,000 of, if they are decreasing by 30,000, so they will come in decrease column 30,000. Then cash 80,000, 1,10,000, yes, it's increasing by 30,000, so in increase column 30,000. Okay, direct relation. Is everyone clear with this? Now all the current assets are done. We do the total. 4,90,000, 5,05,000, 5,15,000 total, and mark it as A. From that we will subtract current liabilities. Now current liabilities, Raj, trade payables. Only one current liability is there, trade payables. Opening balance 3,10,000, closing balance 2,90,000. Yes, now working current liabilities have inverse relation with working capital. So if current liability is decreasing by 20,000, working capital will increase by 20,000. Is everyone clear with this? Now total will be same because there is only one current liability. So 3,10,000 and 2,90,000 total. Is everyone clear with this? Then Agam, what do you call that as? Net working capital. Now we will find net working capital, that is A minus B. So 4,90,000 minus 3,10,000, 1,80,000, 5,15,000 minus 2,90,000, 2,25,000. What to do in the last two columns? In last two columns we'll simply add them. Total increase is 75,000 and total decrease is 13,000. Okay. Last two columns you will simply add it. Now you do the balancing. So in these two columns, if we do the balancing, higher figure is 2,25,000 minus 1,80,000, so 45,000. And here also, if we do the balancing, higher figure is 75,000 minus 30,000, 45,000. What does this 45,000? Increase in net working capital from 180 it is increasing to 225, means it has increased by 45. Or else even if you see total increase 75, decrease 30, means net increase is 45. So increase in net working capital. Is everyone clear with this? Any doubts are there here? Now after increase in net working capital, we have to make fund from operations. So fund from operations. Netra, how will we start? Here we don't have P&L account. We'll start with reserves, general reserve. I told you in the beginning of the chapter, if P&L account is not given, then start with closing balance of reserve minus opening balance of reserve. So in general reserve, whatever other figures that will be taken into consideration. We directly start with closing balance of general reserve, that is 1,10,000 less opening balance of general reserve 85,000. So 25,000 is profit, net profit during the year. Did everyone understand this? Any doubts in it? Now, sure, but outflow of funds. And items debited to profit and loss account but not resulting in outflow of funds. Snail, what are items will come here? So tell me all the items. What amount? Okay, very first from working note 3. Depreciation is 65,000 current year. So depreciation in bracket working note 3, 65,000. Proposed dividend working note 4, 65,000. Yes, provision for tax from working note 5, 1,15,000. Did you understand this? Depreciation, proposed dividend, provision for tax. What else? Interest on bank loan we have marked as O plus on liability side. And as we discussed, 1,415 days is given, so we count on closing balance. That is 75,000 into 7%. 5250. What else? Over? No. Working note 1. Loss on sale of machine, that is 10,000. Loss on sale of machine in bracket working note 1, 10,000. See, this is a very erratic way of going through. So be a reader. What is the proper and systematic ways? We have to select all the O plus and O minus items. First see on liability side, then see on asset side, then see the adjustment, and then see the work. See each and every corner of the question. Liability side, where do we have O? Asset side, where do we have O? Then look at the additional information wherever we marked O. Then see the workings wherever we have marked O. So you will not miss out any of the items if you go to the systematic. Is everyone clear with this? Total what we have to add is 65, 130, 245, 2 lakh, 16,250. If we added 2,85,250, do we have any O minus items? See on the liability side? No. Asset side? No additional information? No. Anyone in workings? No. So this itself is fund from operations. Did everyone understand this? Any doubts out there here? And now lastly we have to make fund flow statement. Fund flow statement for the year ending 31/3/16. Make the forward everyone. Jet, very first we'll take sources of fund. Tell me all the sources. Very first we should always take fund from operations. Very first source of fund, if it is lost, we should take it in uses. So fund from operations, 2,85,250. Yes, what else? Means what will we write? Issue of equity shares. Did you understand this? Issue of equity shares, that is 1 lakh. Then borrowing of bank overdraft. Okay, borrowing of bank overdraft, 5,000. That's it. No. Adjustment 1, we have not done the marking, but then sold for 30,000 as S. If you have sold machine for 30,000, is that also a source of fund or not? Yes. Mark that as S. So sale of machine 30,000. Did you understand this? No other S mark item. Any confusion in that? Now 285, 385, 390, 420, 250, and then from that we have to subtract uses of funds. Namrata, yes, liabilities side, interest on bank loan we have marked as uses of fund. So interest on bank loan 5250. Asset side nothing is marked as you. Purchase of investments. Okay, as I said, go in the order, you'll never make a mistake. So liability side we have seen, asset side. Purchase of investment 30,000 is uses of funds. Then in additional information, dividend paid 50,000 is uses of funds. Further, tax paid 65,000 is uses of funds. Further, bank loan repayment or repayment of bank loan 25,000. In balance sheet, all of you can see that 1,75,000. So repayment of bank loan 25,000 is also uses of funds. Now see in the workings, anything marked as you. Purchase of fixed assets 2 lakhs. Okay, working note 2. Purchase of fixed assets 2 lakh. As I said, every corner of the question, if you see it carefully, you'll never make a mistake. In bracket, working note 2 lakhs. Okay, are you able to understand this? We have made the working of fixed assets and we got purchase of fixed assets of 2 lakhs. Anywhere else in the workings we have marked as U? No. So all the items are taken into consideration. Now, total uses of fund 3,75,250. What is the difference amount? 45,000. Does it match with step 1? In step 1, what was increase in net working capital? 45,000. Increase in net working capital. So everyone is clear with this? Means first we found increase in net working capital, and these are the reasons why net working capital is increasing by 45,000. Okay. So all are clear with this difference in fixed assets working? Now look at question 9. It is your homework. I am discussing it fast. Clear it. Question number 9. See that you all solve it carefully in this manner. With 15 marks question will come in exams. If you are not doing the homework, not practicing it in exams, you will not be able to do it. Okay, I'll myself check the homework tomorrow. Look at 9th question. Following are the balance sheet of All Rest Limited Company for the year 14 to 15 and 15 to 16. First adjustment. Out of total fixed assets, one of the asset costing 20,000 was sold for 10,000. Sold for 10,000. Sources of fund. Mark it as S. Accumulated depreciation till date of sale was 6,000. Same 3 workings. First, machine sold cost is 20,000 minus accumulated depreciation 6,000. So WDV 14,000 minus selling price 10,000. So loss of 4,000. 4 plus. Then fixed assets in the balance sheet, market as ledger account. So opening balance 82 debit side, closing balance 80 credit side. Then depreciation of assets sold 6,000 credit side, selling price of 10,000 credit side, and loss of 4,000 credit side. Whatever remains would be purchase of fixed asset. And then you'll make accumulated depreciation account to find current year's depreciation. Okay, opening balance of 22,000 credit side, closing balance of 30,000 debit side. Then depreciation on assets sold 6,000 debit side. Whatever remains is current year's depreciation. Exactly. In balance sheet, fixed asset market as ledger account, accumulated depreciation market as ledger account. Any confusions with that? Next. Dividend paid during the year amounted to 9,000. Dividend paid, uses of fund market as U. In balance sheet, proposed dividend, what is opening balance? 10,000. Is that what is the dividend paid? No. So in balance sheet, proposed dividend mark ledger account. So this will be your 4th workings. Opening balance of proposed dividend 10,000 credit side, closing balance of 11,600 debit side, dividend paid of 7,000 debit side. Whatever remains is current year's proposed dividend. Third adjustment, tax paid during the year 15 to 16 amounted to 7,000 market as uses of funds in balance sheet, provision for tax, ledger account. I am not discussing, you must be able to do that now. Fourth, company made a fresh issue of 12% preference shares on 1/4/15. Say in balance sheet. What is opening balance of preference? Nil. Closing. Therefore, there is a fresh issue of preference shares. Where will you take that? Sources of fund, market as S. Okay. Then, on the same date, additional funds were raised by further issuing 13% debentures. Same balance sheet, 13% debentures. Opening, closing. So we have further issued 26,000 of debentures. Where will that come? Issue of 26,000 of debentures? Sources of fund. Now see adjustment for what is the date? 1/4/15. So you'll count interest on what amount? Closing balance 38,000. So in balance sheet against debentures, write down interest on 38,000. In balance sheet against debentures, write down interest on 38,000. What will be the two effects? O plus and U. Market is O plus and U. Okay, 38,000 into 13%, whatever amount comes O plus as well as U. Now look at the remaining points in balance sheet. Equity share capital 80/80 is remaining same. No effect. Okay, neither there is issue nor there is redemption. Preference shares we already marked as S. General reserve 4 plus, but no effect. What is opening? 4,000. Closing 4,000. There is no change in general reserve, so no effect. Profit and loss account O. It will be the starting point. We'll start with closing balance of P&L account 2,400 minus opening balance of P&L account 2,000, so 400. Debentures we have marked as sources of fund and interest O plus and U. Yes. Trade payable, current liability CL. Proposed dividend we have done the marking. Provision for tax we have done the marking. Bank overdraft, no uses. What is opening? 25. Closing 30. So there is repayment of bank overdraft of 11,400. So that will come in uses of funds, mark it as U. Fixed assets, done the marking. Accumulated depreciation, done the marking. Trade receivables, current assets, CA. Inventory, current asset. Prepaid expense, current asset. Cash at bank.